Welcome to this weekly update. I'm Julia Lee, an equity strategist with Bell Direct. And let's start off by having a look at the Australian share market. This is the ASX 200 index over the past year, and you can see that technically not too much has changed. On the downside, it does look like we may be headed down to that first line, which is support at 5,192 points. However, in the medium term, the Australian share market looks to still be trending upwards. Look, October does tend to be a good month for the Australian share market. In fact, since the benchmark 200 began 17 years ago, it's been the best month on average, with average growth of 1.7% during that time. Probably helping that is the fact that we do see the banks going ex-dividend in the first 2 weeks of November. So that's ANZ, NAB, as well as Westpac. And so the banks tend to be well supported in the month of October. However, this has been a week where we have seen the commodity bears roaring. First of all, with UBS downgrading both BHP and South32 down to a neutral, and then some pretty aggressive calls from both Citi as well as Bell Potter, downgrading BHP Billiton down to a sell, and also Rio Tinto down to a sell as well. So unsurprising to see resources coming under pressure. BHP down 4% for the week and Rio Tinto losing 2.5% for the week, although South32 has bucked the trend with a gain of 1.5%. Staying with commodities, and this time Deutsche Bank talking about which commodities it thinks is going to outperform ahead of the US Federal Reserve hiking interest rates in the US, probably in December. It says that it prefers to be long oil rather than gold, although it is still positive on gold. It's saying that the oil rhetoric at the moment is positive for prices, and also we're seeing increasing inflation expectations. And while that tends to be good for commodities as a whole, oil does tend to outperform. It's also said that it sees relative value in oil compared to other commodities. Let's not forget that back last December in 2015, when the US Federal Reserve last hiked interest rates in the US, we did see underperformance by gold as well. So that's the call by Deutsche Bank, long oil rather than long gold ahead of that US Federal Reserve hiking of interest rates. Goldman Sachs concentrating on the sterling. So for anyone who wants to go to London, they're probably wondering whether to convert currency now or later. Look, Goldman Sachs says that it doesn't think that the negative news is fully valued in the sterling at the moment. It's saying that, look, it sees data deterioration over the next year, and that means a negative impact in terms of the sterling. And it also sees policy news being neutral to negative for the currency, as the focus is in on economic growth rather than inflation. Also, US dollar strength because of rising US interest rates has negative implications for the cable. It has modelled what it thinks would be the downward trajectory for the sterling against the US currency. And look, we're 4 months into that forecast, and it says that over the next couple of months, it still sees a 7% deterioration according to its modelling. Looking at Morgan's and its high conviction list, look, there's plenty of ideas on this list, but two that have probably the highest potential. One is Kina Securities with a code of KSL, and ImpediMed, IPD, which have the largest potential re-rating according to Morgan's. So lots of ideas on this high conviction list if you're looking for stock ideas. Moving on to UBS equity strategy. Look, they're moderately overweight in resources at the moment, neutral with the banks, but underweight defensive income. So they're areas like property as well as utilities, and they're also underweight the high PE growth area as well. They've added APN Outdoor, APO, to their model portfolio, as well as BlueScope Steel, BSL, but they have taken away Ansell, ANN, as well as South32, S32, out of that portfolio. Look, they're negative on high PE growth at the moment because of the number of disappointments there have been in this space, whether it's Medibank, TPG, Vocus, or even Blackmores. And there's been some underwhelming results by some of these high PE ratio growth companies as well, from the likes of CSL, SEEK, as well as REA. But just having a look at their model portfolio, and if you're looking for stock ideas from UBS, some of the stocks that they're overweight at the moment include stocks like Aristocrat Leisure, Brambles, Healthscope, Certex, Aurora, as well as Star Entertainment. So lots of ideas there from UBS as well. And finally, just having a look at the best and the worst performers for the week. And this week we've seen Monadelphous up by 10%. We've also seen BT up by around about 10% and Green Cross up by 8%. Look, it's been a turnaround for Green Cross, which is nice to see, but BT as well as Monadelphous continuing to outperform as both of these stocks have throughout the last 3 months. On the flip side, unfortunately, it's been more bad news for Estia with a decline of 11% this week. We've also seen Iluka down 10% after its production numbers, and Oz Forex also down by 10%. Now, interesting to note that stocks that fall often fall even further, and that certainly has been the case with the 3 worst performers, because over the last 3 months, these stocks have all lost more than 20%. So that's it from me this week. The Australian share market seeing its first weekly decline in 4 weeks, but altogether October does tend to be a positive month, especially for the banks. Thanks for joining me. Hope to see you next week. I'm Julia Lee from Bell Direct. Have a great weekend.